our baby shower went fantastic. Thank you guys for the well wishes on that. And I am excited it is Wednesday because I get to give you another one of my videos and we get to get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, and Nvidia. We're going to go right into it, and we're noticing right here, what is the big thing that is the elephant in the room, correct? It would be the elephant in the room. Okay, look at this weekly range. We're now outside of it early on this week. Now, we talked about these divergences here early on in the week, right? On Sunday, we posted that we are holding up at a perfect spot. Notice that this is right at this wick here. So if we just pay attention to any upward movement, we most likely will be heading upward and creating some kind of right shoulder. So we talked about the possibility of this being a right shoulder at this point. We have to pay attention to this because we're outside of that weekly expected move. Now, in this scenario, because we are close to that all-time high, I really believe we could see continued buying into tomorrow, just because we want that all-time high narrative, and then some kind of drop is coming in the near future. So this 2 hour, what we really want to pay attention to, we got back into positive territory. That really was our signal to close out of any shorts that we had, right? We want to close out of any kind of shorts we have because we're in that positive territory, which means we can see an extension in this move in positive territory down here on the MACD. We're approaching those overbought conditions on the RSI. And you'll notice that if we do want to go a little bit higher, kind of violate this as a right shoulder by cutting above the head of it, this could be pretty bad because what we're setting up here is another point of divergence, right? So we could actually see this go a little bit higher. Maybe we even get a divergence right here in this price action before this falls. The reason that I'm mentioning this before tomorrow is because we do get CPI data. So that CPI data is going to be very important tomorrow, and we'll have to see what price does till then. But if we go into a 30-minute chart, I'm just going to show you guys how we're creating these little divergences up here on a 30-minute. And this is something that I really like to pay attention to, right? These divergences outside of the weekly expected move. As of tomorrow will be Thursday, right? So we still have a little bit of time, and 68% of the time we do land back in this zone because that is all that is expected from the options market, by Friday. So by Friday close, there's a 68% chance that if we do see more buying into this move, we actually do come back into this purple zone. So maybe this will be some kind of buying into the CPI. Maybe we'll actually see this consolidate and then we pop higher in the CPI and something in the system brings us back down. So we really want to pay attention to this price action this one more time because we're getting outside of that weekly expected move. It means that buyers are getting a little too excited too fast. We would really like to see, some cupping in here, come all the way up and see a deeper handle. That way we know, hey, if the CPI comes out as good, there are some steady buyers behind it. This right here on the Qs is what we were talking about on Sunday, okay? If we do see some kind of buying up at this point, and then we see that the SPY is actually going to higher levels, and the Qs are not confirming that higher high, that will be a big signal. If that starts to turn around and then we see this roll over, look how close we are to that negative territory. So as of right now, yes, we're seeing that bullishness come in, but right before the CPI, when we could see something bad happen, not saying it has to, but we just need to pay attention to these upward levels because guess what? This is where we saw selling step in, then we buy back up. This is where we see selling step back in, and we're right back up in that area. Just to switch it up, I'm going to pull up the 15-minute for the Qs, and we're noticing all of these higher highs, but the MACD isn't necessarily doing that, right? It's confirming that we do have some divergence up here. That just tells us that the momentum is dying out, and we are able to start a negative trend on the shorter time frames, and we'd look for that to carry over to like a 2 hour, and then again on the daily. So really what I want to pay attention to on the 15-minute is if we actually confirm some more downside here and get this to get into negative territory, we can start that negative trend again, and maybe this is just a overall big ABC pattern to go to lower levels, maybe even testing the bottom of that monthly expected move. So it's really going to be interesting going into tomorrow. Right now, I have to say, I was pretty bullish, honestly, at these lower levels because of the divergences. I said, hey, it would make sense if we see a little bit downward side and then we get that pop. But right now, you're seeing that upward move with the CPI, before the CPI, that is. And that means that we have to kind of flip our hats up here as the momentum is dying. It's a good point of reference for the week. If you do have calls on this towards the end of the week, this is a good area to take some profit off the table. And that's how I use these weekly ranges. I use it as a good profit taking tool for my weeklies. Apple, I really wanted to show you guys the 30-minute first. I really thought that we wanted to really touch into this zone before heading higher, but that buying came in, we gapped a little bit higher, and we just kind of went, and now we're moving not the strongest up. So we're seeing overall buying in other stocks, but Apple is such a popular stock, so you really want that participating in this move. The other thing on this shorter time frame I wanted to talk about is when we get out of these zones, like this gray zone up here. When we get outside of this zone, we drop to lower levels. A lot of the time, we like to test that zone one more time, and then we get that trampoline effect the other way. So we can actually bump our heads on this and then see that dramatic selling come back in. Now, I'm not saying that has to happen. I'm still following whatever comes out with the CPI with this kind of news. As of right now, we have this little divergence setting up on the 30-minute, but it hasn't confirmed. Maybe we do want to test this level and then see what happens with the CPI, because if we're going to head higher from here on Apple, this would be the big cup, right? And we're most likely going to see some kind of handle to head higher. But if this is actually able to reject and roll over, start to cut below these moving averages, it's a good chance that we're coming down into this zone pretty quick. This is where I wanted to point out the 2-hour. I wanted to show you the 30-minute first, but now I want to show you the 2-hour to say, hey, yes, this is a bounce, right? This is a solid bounce at this point, but it is not in positive territory yet. So at this point, if this wants to roll over, we could actually head to lower levels in Apple. Apple is, Apple's going up from here. Let's see how much it's really gone up from the bottom. That'll really help us out. So let's see. Well, we're up 3.29%. So is that really that big of a recovery compared to where we dropped from all the way at this high up here? Let's find out. I mean, we went down 9.3% and now we're only going up 3-point-something%. So we have to pay attention to our MACD getting into positive territory. If this is able to roll up and get into positive territory and stay there, we could see this keep going, right? We really could. But if this actually rolls over, you're in that negative territory. Bad things can happen. Negative trends continue when you curl over into negative territory, and we could be seeing another drop just as everyone thinks we're about to recover fully. Amazon on the 2-hour, I believe, is a great one to pay attention to. This is some extreme buying in Amazon. So there's some big buying in Amazon, but we're coming up into this high, and maybe we're even going to go a little bit higher, really confirm some kind of divergence that is right next to negative territory on a 2-hour. So that just means there's some pain that could come if this rolls over because we're close to the negative territory. We have a chance of cutting through this low. Maybe this is some kind of trap up here before we get CPI data. But once again, I am paying attention to what that CPI data actually states. The reason I'm saying we could go up first is because we kind of have a mixed bag on that data. One of the pieces looks like it might go up a little bit. One of the pieces looks like it could come down a little bit. So maybe the first reaction is, hey, we saw one of the numbers actually go down a little bit. And then the next reaction is, hey, let's really think about this. We're actually seeing that rise on another scale. So we could see those yields start to trickle higher. And we're going to touch on yields a little bit at the end of this video. But right now on Amazon, I would really pay attention to some kind of divergence up here. Just as of right now, we're really at the point where that divergence could confirm, and this actually could start to break lower, get into negative territory. And when we do that, curl over negative territory, you test the low or you make a new one. Tesla's one I wanted to show the daily real quick because we've really been talking about this area down in here, how we've used it as support a few times, and we really need to pay attention to this 230 to 232 level. And look where we bounce from. Well, it's about 231.70. Okay, so 231.70, it lies within that 230 to 232 level. This would make a lot of sense for us to get a little bit of a bounce, but because we have data tomorrow, we can see more dramatic selling. Now, why could we see more dramatic selling on the daily scale? Well, this MACD was able to get into negative territory. So I'm really paying attention to Tesla at this point. I'm paying attention to those weekly ranges, and we're going to go over those on Saturday. So subscribe and join us back for Saturday's video where we do look at the whole week that we just went through. Now, the thing about Tesla here is, yes, you could get some kind of bounce at this level. You're seeing this flatness of the MACD, flatness of the RSI. You can even maybe consider this a slight divergence on the 2-hour. So we could see some kind of bounce because the momentum is out. But if we don't get good news tomorrow, I wouldn't count on this bouncing. Remember, when I talk about divergences, I really like there to be some news behind the momentum dying, right? When momentum is dying to the downside, I really want some good news to come out because that is what will produce a solid bounce. At this point, you're seeing us hold down in this negative territory. And I'm really looking at this RSI. This RSI, yes, it is down towards oversold territory, but it's never really gotten into oversold territory, right? So I really want to pay attention to that. We could be seeing a further drop just because of what we talked about on the daily. If we do see a pop in Tesla because of that news, I would want to be paying attention for some kind of right shoulder. If this is able to, see some buying up on the MACD and then roll back over negative territory, good chance that if we get this pop, you're going to test this low, make a new one. But we'll talk about that on Saturday as well. Now, Nvidia is something that you definitely want to pay attention to. We were talking about how this is flagging, and then on the 30-minute, we actually went even deeper and said, hey, it's even consolidating at the top of this flag. We could see this start to move higher. But what have we been saying for a while? If we get outside of 512, we're really looking for some confirmation on a divergence. This MACD here is like kind of interesting, right? This actually isn't divergence because this closing bar doesn't come above, or this closing bar here doesn't come above this closing bar here. So that's not technically divergence at this point. Now you have that scenario in hand. And if we actually see this drop from where it's at, you'd have an even divergence on the RSI, and you have a pretty steep divergence on the MACD, which just tells you it can go into that negative territory, start a negative trend on the daily scale. And the last thing, and probably the most important thing why you should be paying attention to NVIDIA, we're going to go into shorter time frames, so not the last thing, but something you really want to pay attention to. This right here, we're outside of that monthly expected move. So 68% of the time, we do see us land back within that monthly, and this right here is outside of that monthly expected move by a decent amount. So this is something we really want to pay attention to because 68% of the time we do close the month back within those ranges. And we could be getting a little too excited in NVIDIA the past few days. The 2 hour, if you're wanting this to head higher, we really need this to digest, right? We need this to start to consolidate sideways to get that second push higher. And that's totally possible, right? This is a very bullish move. Crazy things can happen outside of those ranges. So we want to pay attention to both sides of the coin. You can see an upward move here, but remember that resistance up here between these two highs, it's held pretty firm, right? You can see boom right here, and then we test it again. We don't even get all the way up to it, and we see that selling come in. Right now you're very, very overbought. So this would be a very high level to start investing. And it might just mean, hey, be a little bit patient here. If this is going to go higher, it's going to need to consolidate a little bit, and then go higher afterwards. On Sunday, this is what we were talking about with these yields, right? We noticed that we're getting too excited too fast, pricing in way too many rate cuts. So we were expecting this to pop. That really led us to that downfall we've seen. And now we're starting to buy back up. The problem with this, with the market actually going higher, these yields have not really moved, right? They've really consolidated sideways, maybe in some kind of triangle at this point, and we could see a pop higher as of tomorrow. So we really want to pay attention. If this is able to break down a little bit, you might see that bullishness come back in, but these yields are moving sideways before that information, which makes sense. We see TLT here not confirming the move that is happening in the overall market, right? This is a big, big signal we pay attention to. The SPY is actually coming up and testing this high up here. The TLT, it's coming down, okay? So we really want to pay attention to that. And if you can just solidify this with HYG is getting a little bit of a bounce, but it isn't necessarily testing this high at this point. So SPY's up in here, and high yield growth is actually coming in lower. Just means we're getting a little too excited before some news. Now, if that news comes out as good for the market, yes, we'll see HYG catch up. But if that comes out as bad, it means that HYG was hinting at this move. TLT was hinting that, we're getting a little too excited, and we actually could see this as some kind of ABC pattern, right? We could see this be boom, 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 and then head to lower levels. One thing I wanted to point out was the dollar. Coming out of here, we were just like, hey, we're getting too bullish too fast. We're breaking through a pretty big trend line too fast, right? So we knew that people were too bullish. It was another hint that we were going to see some selling come in. We saw that selling come in, and now we've consolidated sideways. So the dollar is consolidating sideways while the market is going up. So if you saw the market going up, you'd really want this dollar to be backing off pretty significantly. So at this point, you have the dollar moving sideways, you have yields, you have TLT not necessarily guaranteeing, hey, this pop is real. Definitely not in TLT. High yield growth is holding up a little bit better, but it's not matching where the SPY is at right now. So it's just a time to not fully put your foot on the gas. These Bollinger Bands on all this stuff we've been going over getting tight. We could see an explosive move in the dollar pretty quick. The VIX, we were talking about how it's in this channel. So if we did see that bullishness, you're going to expect it to come to the bottom of that channel. And that's what's happening now. I just wanted to go into the hourly here just to show you real quick what I was looking at. And right now you are seeing how we're in some wedge, and we're starting to move sideways outside of this wedge, get a little bit of a retest at the end of the day. And that's really what I'm paying attention to. The fact that we're actually moving higher, but we're not seeing the VIX break down through this, this flag here could be news that, we want to go higher. So really we're in a range, not necessarily a flag. So the fact that it's not breaking to the downside of this range just yet just tells me, hey, I still have to be a little weary because there's some big data coming out tomorrow. Now, if that data comes out as good for the market, good. Well, this can break down and we can see the market go a little bit higher, but I'd really be paying attention to that 12.12. The last time we were at 12.12, what happened? We sat there for a second, boom, we see volatility come back in. This level is very good to watch for your kind of like risk to reward model. The main takeaway here is we were expecting some kind of bounce because the SPY held up exactly where it had to in order to get that bounce. So we did end up getting a bounce. We didn't head to lower levels first like I wanted, but we got that bounce, we got into positive territory, so we knew, hey, we need to take those shorts off the table for a little bit. But we're getting overextended again right before some big news. So we really want to pay attention to what the CPI actually says and then react from there, because we could be seeing a major rug pull in the very near future, meaning the next few days, maybe going on into next week. But right now it looks like rug pull might be on the table. Thank you guys so much for watching. I literally went to work, worked late hours, came back, made this video, so I'm hoping that you guys are able to see it. But thank you so much for watching, liking, subscribing, all that good stuff. I really do appreciate it. Wish you all the luck in the world trading. Join me back on Saturday because that's going to be my next video. I'd really appreciate it to see you back here on Saturday. Peace.